The Massachusetts Research and Development Tax Credit closely adopts the federal tax credit definition of qualified research and qualified research expenses, although it specifically offers eligible Massachusetts companies unique incentives for doing business in Massachusetts. The Massachusetts R&D tax credit is available to any foreign or domestic corporation subject to the corporate excise under Chapter 63 Massachusetts law. The R&D project must follow the federal guidelines for being technology-oriented, and while not mandatory, Massachusetts does expect to see a substantial amount of costs related to experimentation. Since much of the work done on a federal return applies to the Massachusetts return, it makes sense to claim both credits. Although similar, there are a couple of important differences between the federal and the Massachusetts research credit. These include the following. The Massachusetts research credit is divided into two categories. The first credit category is a 10% credit designed for qualified expenses, which are defined as any research expense incurred which would qualify for the federal R&D tax credit. The second credit category is a 15% credit available to basic research payment for any costs related to donations and contributions made to research organizations such as hospitals and universities. If the taxpayer didn't have qualified research expenses in any one of the 3 taxable years preceding the taxable year for which the credit is being claimed, the credit is equal to 5% of the taxpayer's qualified research expense for the taxable year. The credit amount is limited to 100% of the corporation's first $25,000 of corporate excise tax liability and 75% of such liability over $25,000. The credit cannot reduce the corporation's tax below the minimum tax of $456. An S corporation can apply the research credit against its excise tax liability, but may not share any excess credit with its shareholders. For flow-through entities, the credits that are paid or received by such entities must be attributed to the owners of the entities and be taken into account in determining the credit for the taxable year during which the taxable year of the unincorporated flow-through entity ends. Unused credit that is prohibited under the 75% limitation may be carried forward until exhausted. Any credits prohibited that are not in limited status can be carried forward for 15 years.